Now, Ecobank Transnational exists in 32 African countries, very active in Ghana, Nigeria, and has strategic partnerships with Nedbank here in South Africa. Let's take a look at why this bank is a buy for Godfrey Mwanza. He's an equity analyst at African Alliance Securities. Thanks so much for your time. Let's talk about Ecobank Transnational. It has a big profile, particularly in Francophone West Africa. And it's done really well. I think in their first half 2011 results, we've seen profits after tax up 30% and their earnings and revenues at 24%. So they're doing pretty well. How do they compare to other tier one banks?
Well, before I answer, I just want to caveat that, but I can't say that it's a buy. We've not published our initiation yet. I can say some investment thesis behind the company, though. But as to your question about their performance, half on half, Ecobank did very well, as you said, about 24%. Total income growth. Compared to other Pan-African banks, let's say, for instance, Standard Bank did about 13%. Of course, there's a big, heavy weighting in South Africa for that bank. Attijari Wafa, which is mostly focused in North Africa, so north of, in the Sahara region, that did a high teens as well, about 18% total income growth. If you look at where it's listed, Ecobank, the most liquid listing in Nigeria, you can compare it to, let's say, a Zenith Bank, whose revenues were up massively, about 50%. First Bank about 40%, Guarantee Trust about 20%. The thing with particularly First Bank and Zenith, those are very peculiar to the dynamics of Nigeria. If you look at a Pan-African bank, they're doing very well.
Okay, let's talk about those peculiarities in Nigeria, because some would argue, you know, they have stellar performance in markets like Ghana, for instance, but not quite so in Nigeria. For some reason, they haven't been able to gain traction, for lack of a better word, in Nigeria, to be as prolific as some of the other tier one banks. What are the challenges that Ecobank faces in Nigeria in particular?
It's a very good point. What happened with Ecobank, if you remember in 2006, 2007, when the governor was Soludo, and he had a recapitalization policy that basically increased the capitalization of these banks significantly. So a lot of the local banks scaled up and became behemoths. What you had with Ecobank is that the focus ultimately was diffused. They were expanding all over the continent, and essentially you could say that they missed the boat. And as a result, they had to acquire quickly failed banks, which they spent a lot of time restructuring and optimizing, and that's basically meant everyone else has been able to take them over.
Are we likely to see them being active in this current round of mergers and acquisitions in Nigeria?
Absolutely. They are looking at Oceanic Bank. They've signed a TIA with Oceanic Bank, which, as you know, is one of the rescued banks and is a big bank. And it would move Ecobank from 13th, 14th in the industry by assets to about 4th. So it's a big step change for them.
All right, let's talk about their strategy to survive, particularly at this time when there's Basel III and the need for banks to sort of deleverage and de-risk. They've been very conservative in their stance, focusing more on deposits as opposed to loan growth. Is that a strategy that can really sustain? Because right now Africa is hot property, everybody's needing money for mega investments, and they don't seem to be very active in that space.
Well, actually, they are very active, but your point about the deposits rising faster than loans, this is just the state of banking or commercial banking in Africa at the moment. Most banks' models have been focusing on the corporate sector, and the retail sector has been mostly deposit mobilization. And you will see that pretty much with all the banks, especially the ones listed in Nigeria. You will see deposits growing by 20%, even more, but loans growing by about 10%. So at African Alliance, our view is this is almost a leading indicator to what's going to happen. Banks are getting a lot of funding, and as opportunities, as integration or intermediation and credit seeps through the economy, you will see then loan growth come after that. But as far as funding big projects and so on and so forth for ETI, absolutely, there is a lot of activity in inter-regional trade or inter-Africa trade, and also with regional giants that are basically developing, you know, your Dangotes or your, you know, your Ken Oil in Kenya, guys who are basically domiciled in a country in Africa, but they're expanding throughout the continent. ETI is funding a lot of these guys' expansions.
Their exposure to some of the inflationary risks, particularly as we see them in East Africa, for instance, how vulnerable are they? Well,
for East Africa in particular, their exposure is quite small. They bought a bank in Kenya, for instance, in 2007. But in terms of how much it affects the group at this stage, it's very, very small. But of course, inflation does affect interest rates, it affects operating costs. Zambia, for instance, is a market that they recently entered, and they'll be the first to say that the operating costs regime there is much higher than in other markets. But what you have with Ecobank is that it's diversified. So if you have inflation or deteriorating dynamics in one market, the idea is that you can basically offset that with other markets.
Raising its profile, we know they have an alliance with Nedbank. There's also talk of them doing stuff with the Bank of China. What does that mean in terms of raising their profile? Because there's also a sense that they do very well in Francophone Africa. I don't know if that's a misconception, but there is that sense that by being Togolese, they almost understand the psychology of Francophone Africa better than Anglophone.
Okay, well, to address the second part of your question, time is a very important factor here. So if you look at where they started to expand and where they basically started operation, it was Francophone West Africa. And they've gotten themselves to a position where in all those markets, they're in the top 3. Over time, the vision is to basically create a lot of scale in the other markets that they were later to in starting up or acquiring. So our expectation is that that will start to balance out, over time. And in terms of the international profile you were talking about, the Nedbank Alliance is very important for retail clients, for instance, because it means you can use your Ecobank card at a Nedbank ATM. And all this is great for transactional income, and that's a more retail transaction focus. But on the corporate side, the idea is that if you've got South African companies that are going into the rest of Africa in terms of investing and expanding, Ecobank is your bank to go to, which means they're competing with Standard Bank, but it does mean that it goes from the 24 banks in Nigeria to the 4 or 5 banks who can provide that kind of service.
Let's leave it there. Thanks so much for your time. Godfrey Mwanza, who's an equities analyst at African Alliance Securities.